evening. Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for the evening of Wednesday, the 8th of January. I want to say June, I don't know why. January 2025. Now, there won't be this update tomorrow because the stock markets are all closed tomorrow, so I'm not going to do the same thing twice. It would be the same as we have. So the next time you'll see this will be the weekend edition that I do when we look at the weekly charts. Tomorrow, very light day for news. I don't want to show that. That's about TradingView, but let's get here. Challenger Group is going to come out with their December U.S. planned job cuts at 6:30. We're going to get the Fed President Harker, Fed President Schmidt, Fed President Barkin all speaking tomorrow. So they're not paying attention to Jimmy Carter's Observance Day. I'm not saying that negative or positive. I'm just saying it. They'll be out there speaking. The Chicago Mercantile Exchange is open tonight, so the S&Ps, the stock indices, they're all trading, bonds, notes, everything's trading, but they'll start closing in the morning in abbreviated manners, and most things will all be done by around noon, approximately noon Central Time. And then you have to wait for the markets to reopen for the futures at 5 p.m. on Thursday, and then it'll go through. So we'll see what we do, but there's no point in me doing another one of these. We're hearing President Biden is about to roll out new tiers that are going to impact U.S. chips, specifically AMD and NVDA chips. I'm not exactly certain what he's trying to do here other than keep certain chips out of people that, or countries, both entities, that he doesn't want to have this to guarantee the lead that America has in AI for the moment, and certainly doesn't want those chips used against America, and we'd be doing that. I don't know if he should be doing this at all. Why isn't he leaving that to Trump to get that done? He's on his way out, and just doesn't make sense to me. But that's where we're at. All right, so when we come to the chart action today, you were up in the stocks, and the first 5 trading days had gains in the S&P, feeble, but gains, and in, I believe, the Dow. So if you go by that indicator, the word is if you do, that one was an up moment. In watching how the rest of the markets went, most of the metals were up today, and they are up in the market tonight. I'm having trouble with why copper should hold gains, but that's my own thing. I don't like the chart action at all that I'm seeing, and I question if China's going to do anything of size. You heard the word I said, size. We know that China's been doing things to spur on the economy, and what they're doing is trying to attack their market, their local home market, their consumer market, by getting consumers to feel better in some way and buy durable goods. Durable goods could be refrigerators, dishwashers, things of that nature. The problem is the Chinese consumers watch their property market crash on them. They have not seen it come back. And until that comes back, I think that all these, if you will, subsidies that the government wants to give and what they offer if you do these things, I think you'll get some people that need things and they'll get it done. They did this with their autos, and that's why they're banned from America. That's why they're barred from other places, because all they do is subsidize them. Then they ship them overseas, and you look at what they sell them domestically for and what they sell them here for before tariffs on them. And you're just subsidizing the companies, hoping to help the government there that's been subsidizing it get away from that. I mean, I'm giving you a very short synopsis, but it's the reality of the situation. It's not my political thinking. Bonds and notes. So what's going on with interest rates? Well, I can tell you that we get the jobs report when you come back on Friday. And that report, via what I'm seeing on the JOLTS report this week and what we've seen today with initial new claims and continuing claims, you still have a strong labor market. Remember, claims you get every week. JOLTS you get once a month. There's more jobs being offered than less jobs. You're not seeing pay increases, but we haven't seen that for a long time. Pay got up to a certain level to keep up with inflation. So what does the Fed do? I think they're just caught. I think they're walking a tightrope here. They don't want to hurt the labor market, but inflation isn't falling the way they want. Could inflation go up? It could. Are the members saying that? Well, if you looked at the FOMC minutes that came out today, and I did send them to all my paid subscribers, and if you read through them, you don't have unanimity in the idea that everybody's going, yes, we're going to go with the Fed chair, and yes, we'll cut now, and there's more coming. I'm not seeing that. Just read what's there. I'm seeing certain members, they're team players, okay, but now we see what happens. By the way, I'm going to repeat and say this to you all the time. You're not going to get a cut, I think, in January. Who knows what March will happen? You don't know. I don't know how January employment's going to come out actually looking, or February employment. And by the time we get into March, we'll have those two numbers for us. We'll have CPIs, PPIs, and we take another look. I would not handle these markets more than a meeting at a time if I were you. It's that simple. That'd be my advice, because you don't know what's going to happen. Does the Fed have to raise interest rates? Not really. The market's doing it for them. So the market taking rates up towards 5% on different parts of the yield curve, which it's done today. What does that mean? Well, that means that the tightness in the economy eventually will show up somewhere, somehow, and maybe that stops the inflation. In BROS, we had that big reversal yesterday, not today, and you're getting follow through to that at this point. The trend is still up, as I pointed out. You have higher lows, higher highs. I think a trade top of sorts is being formed because you got up to the Bollinger Band, you went up to it and stayed over it a couple of days, and then you fell right back. I look for good support coming in at 54.18. My problem with the trade is that when I have readings in slow stochastics that are over 70, the market's overbought. I teach in my courses you don't buy overbought conditions, so I'll stay with what I teach. I'm so happy Oracle finally got down to the numbers I wanted, and it's done that. Back here is where this whole problem developed. You still have the embedded reading, it's bearish, but I think the market, there may be more downside to 148. Not with me. Why? Because you're in the Bollinger Band bottom. Let somebody else have that. And I'm talking if you were bearish. CrowdStrike had the reversal yesterday, a bit of follow through. So until you take out that high, you're sort of still caught in another trading range of a lower low, higher high, and sort of stuck right there. It's hard to want to buy these markets when you look at the overall indices coming down, when you see events happen like you saw Jensen Huang come out from NVIDIA and really knock quantum computers. They fell 25, 30%, a lot of the stocks there today, saying that you're not going to see a quantum computer that really can do a lot of things for 20 years or so. Whoa, we're not talking a year or two. That's an awful long time, and that sort of pulled the rug out from those events. Of course, I saw owners of those companies come on CNBC and give the reasons why he is wrong. And, they have their point of view, and it may be very right, okay? These chips are going so fast, I don't know that you're that far away. Well, we'll find out. Lower low, higher high, you can see where the market's at. It just in the middle of no man's land, but the advice, don't buy it on that rally, turned out to be good advice. Every now and then, even a broken clock is right twice a day. Thank you. On K-Web, you know how bearish I've been on this. It's still coming down. When it bottoms, it bottoms. Don't be a hero in this. There's no way to pick it up. The market doesn't believe what China says. It's going to believe what they do. Now, there is a market that's beginning to believe it, and I'm surprised at it. Brent crude oil saw the front month now widen out to the most it's been over 6 months. So the demand for immediate oil is strong, not further back. What does that mean? Okay, got to pay attention to these things. Forwardation, backwardation, you always look at it. So we'll see what that's going to do here. Toll Brothers, I like that it had a big reversal to the upside today. It's been oversold, it lost its way, and now it's starting to come back and fight a battle. This could be a trading bottom that sets in. Do I think it's going to just pick up and run with interest rates this high? I do not. Does it make sense to get a little bit of short covering in front of the jobs report? It probably does. And in front of the next Fed meeting. You got two elements. You got a little bit of a reversal also in XHB, but you got to lose the embedded readings here to tell me that you can make a run for wherever the 18-day averages are. In the financial services, you're trying to come back to the 18-day average, but until you're back over that number on a close, there just isn't much to do. In XLI, same thing. Markets came down. So the action today were lower lows, and you closed better in a number of the markets. I can tell you the stock indices and early trade and the futures are all lower tonight, and there's a lot that's going to change between tonight and when the markets in these all reopen on Friday. You're not open tomorrow in them. So it's nice to look at them, but I don't know that I'd want you to do too much with them. The energy market, you can see coming up. I don't expect much there. GLD, nothing to do in the market other than it's making a run, just like the futures, towards the upper Bollinger Band in an overbought market. I don't think there's a lot left in it before it has to consolidate. And that's what I think we've done. I think we're in the consolidation phase right here. Let's face it, if inflation takes off, big words, gold's one of the things I want to own. If the Fed can't get it to break on its own, or the market can't, with the market doing the Fed's job of raising interest rates and keeping them restrictive, and the Fed's forced to turn around eventually and raise rates, well, before they raise the rate, you'll probably see the gold market tell you what's going on. Copper, I'm not buying the story yet of anything to do with China. You had a bearish embedded situation. You went to the bone, you lost it. You came back to the 18-day average. That's all it should have done. I still see the bear at work in BND and TLT. No change there. Dollar index, maybe we can get a run up to the 18-day average of closes over the next few days. And in the euro, you're still falling with the target here that could be the 94.74 level before all is said and done. So you put this all together, you have your game plan, and I have one for you. I know a number of you use a service called TradingView. And TradingView is another charting service. Well, all of my indicators work in that. So we have a package that you can get. And you get it by going to our website, iraepstein.com. And in that, you just go to Client Services, top right, and it's there. You just sign up for it all there, and they'll pop up when we turn them on. You don't turn them on. That's how TradingView works it. You don't work them on in TradingView. They don't have an on-off. We have it, but once we give it to you, you turn it on and off. It's pretty simple. So as you look at it, you're going to see it pairs with your videos, my courses that you have. It's got my version of the slow stochastics, not the standard one, all the different parts that I work with it. So you can configure it any way you want, including it shows outside days up and down. I think you'll find it fascinating. So how do you get to it? Go to iraepstein.com, top right, look at the client resources, and boom, away you go. There'll also be an icon up here. Give that a click. I'm Ira. I'll catch you all for the evening reviews either on Friday night or Saturday as I do the weekend edition. You take care.